Hey, what's up, guys? Looks like it is showtime. So, sorry I wasn't here on Monday night. There was a lot going on, and then last night it was crazy, crazy, crazy. So, I thought tonight would be a good time to kind of hang out, talk about this model, what I added to it, what I deleted from it. Did I learn anything from that? And then just talk about whatever you want to talk about. I'm drinking the handy dandy water tonight. So yeah, it's good. It's good. So let's kind of get into some of that. But I thought before I do that, let me show you. See if this. I want to share this with you guys. Part of what has been. Sorry about that. Let me try to get this figured out. So part of what has been on my mind lately is actually harvesting honey. So you can see here, that's what the honey looks like in the, let me get rid of this. There we go. So you can see the honey there. I'm calling it the gold label. These are some hives we have here at the farm. And those hives have, things like blackberries, muscadine, grapes, peaches, plums, persimmon, clover. They have just this really light, sweet nectar to get. And that's why it looks kind of light there on the left. Now, when I put them all, stack them all there together, they do darken up a little bit, but it's not because the honey gets darker, it's just the lighting. But all of those bottles are what we got. We got 78 pounds out of the beehives this year, whereas we only got about 15 pounds last year. So things are looking up. We are really excited about that. But it has been super hot down here. I think today it got into the mid 90s. It's humid as all get out. So it's, it is what it is. But man, is it hot. So anyway, but the harvest is done. It's all bottled. And we're in the process of hopefully selling all of that. So that'll be great. So I want to kind of share that with you guys before we got started. And let's see who all's on the program tonight. It might be a little light because it's we're kind of off cycle here, but that's okay. We got the ones who are important are on this program. We got Rust Moments is here. Good to see you, my man. Ex-dividend dad had a rain delay. That's great, man. That means you can actually show up and be a part of the program. Let's talk about ASML. I didn't look at it. We can kind of take a look at that together. Russ says it's really hot there too. Should be investing in HVAC stocks. Yeah, that's not a bad thought. Those and utilities, maybe everybody's going to be paying a high utility bill this summer. So it's been smoking hot here. So, all right, let's take a look at this model of mine. And just to refresh your memory, let me find a good spot to get into this. There, I'll just start at the dashboard. All right, here we go. This is kind of where I'm at with the model. I have a dashboard here, kind of lays out. So for instance, portfolio value, it shows the availability of cash and then what the current day did. So I was up almost 0.5%. And then, compared to the S&P 500, the Dow Jones, and the NASDAQ. And then it shows me my best and worst performers of the day. And I can set that to whatever I want. Right now, I have it set to the top 5. So it looks like Johnson & Johnson made a killing today. So that's good. I like that. 6.19% it went up. Elements, T. Rowe Price. So everything else was just kind of normal noise. But Johnson & Johnson evidently had a good earnings call. I understand that they have, not only did they beat the quarter, they've increased guidance, and there is a brighter outlook for the future of Johnson & Johnson. So jumped up 6.2% today. So fantastic. Glad to hear that. So anyway, this is like the dashboard. Then I have my portfolio in here. So it shows everything, that I own, what my average cost is, what the daily gain is, what the total gain is, et cetera, et cetera. But then I have this stock listing tab as well. And what that stock listing tab does is it helps me compare one stock to another. And I had at one time about 100 stocks in here. And so today we're going to see how many I actually have. I've added 27 stocks to this model, and I removed 5. And I want to share those with you. But basically what this model does is it compares a lot of different pieces of data, and it has this little formula that I use to tell me what I think the annual return potential is comparatively for each of these stocks. And it helps me rank really what do I want to spend my next dollar on? Where do I want to invest my next dollar? Some stocks are going to be, overvalued at certain times, and then they'll go undervalued. And so it's just a matter of helping me kind of get away from being married to a stock and really kind of being more married to the model, if that makes sense. So, all right, here we go. So let me show you what I added to the model. Here we go. All right, we added Amazon. Now I know what you're saying. Amazon does not pay a dividend, but every once in a while you gotta buy a stock even if it's not paying a dividend. And I don't own Amazon at the moment, but I wanted to put it in the model to see how it would do. So another one is ServiceNow. I know that some of you guys own that. I think Ex-Dividend Dad owns that. So I've added that to the model. T-Mobile, Chubb, which is an insurance company, Constellation Energy, which is a utility. Intuit, I thought would be good to add. Cintas, you can read these. I don't necessarily want to read them to you, but like Marsh McLennan, American Express, Roper Technologies, McKesson Corp. And there are 3 slides here that show the ones that I've added. So I'll let you kind of read through those. And if you want to, you can stop. If you're watching this on delayed, you can stop the video or whatever and see which stocks I've added. But how did I get there? And I want to kind of throw out some kudos here to my buddy Russ. It was you that I learned of the investment. So they keep going up. Oh, is that Johnson Johnson? Oh no, that's Fix. All right, never mind. But anyway, Russ, I put this on here not to talk about your comment, but to say that one of your, I don't know if it was a video or if it was your newsletter that talked about how do we find good stocks. And one of the ways to do that is to find good performing ETFs or mutual funds, finding out what they're investing in and determining whether we should add those items to our due diligence list. And so I just want to, throw kudos to you. That's a great idea. I appreciate you sharing that with the community. And that's what I did. I went to, and I don't even remember which ones they were. And then I came up with this list of stocks. So I went through this effort of putting them all in the model. Then I said, you know what? There's some stocks let me start over. One of my theories is that any stock is worth something. Unless it's gone bankrupt, it's worth something. So if a stock is, trading at $100 a share and things go really bad, now it's trading at $50 a share, it might be worth $50 a share, right? It might be worth $40. And if it drops to 40, maybe that's the time to pick it up, if that makes sense. So every stock is worth something. But there's some stocks that I just don't think I'm going to buy for one of 2 reasons. Either I don't buy into their strategy, or I think their management team is not capable of carrying out that strategy. Those are the 2 things that would cause me, either one of those things would cause me to drop a stock from this list. So take a look I have. So anyway, thanks Russ for your insight in that. That was really good. So here's some stocks that I have taken out of the model. Novo Nordisk, I've taken out of the model. I just think that the craze with those weight loss drugs is going to be a fad. I think it's not going to be a long-lived item, and so this doesn't excite me a lot. So I took it out of the model. Comcast, I took out of the model, and some people go, "Why'd you do that? They pay a great dividend. They're growing their dividend every year." Yeah, I get that, but their strategy is not a very good one, in my opinion. I don't think that they have found their growth model. The cash that's coming in is really more from their internet services or wired piece, and that is eventually going away. As a matter of fact, we don't even have a wired internet service in any of the homes that we own, and we've got like 4 or 5 places that we own. Some we rent out, some we don't. And we don't have service. We had Comcast, matter of fact, and we got rid of it because we thought just having Wi-Fi was the right thing to do. So anyway, so I got rid of Comcast. Lamb Weston is another one. I think that's a management team issue for me. British American Tobacco really is neither one of those. It has to do more with it's just a foreign company and British American Tobacco. So I just don't. I'm not. I could buy. I could buy Philip Morris, or I could buy what's their counterpart. I don't know why I can't think of it. The one that pays a big dividend. So anyway, I just didn't need them in the model. And then Morningstar, I had put in the model, but there's just not enough data on them. The Morningstar model doesn't even value Morningstar. I guess they find it as a conflict of interest. So because there's just not enough data, and I'm not really, totally sold on it, I took it out of the model. So I took those 5 out, and that's it. So the real question is, did anything pop out? And here's some interesting things to kind of take a look at. Let me make this a little bigger for you. Let me move back up. The after adding those 27 stocks, and so now I have. Here, let's look at the bottom of this thing. Now I have 125 stocks in the portfolio. In the model. And T-Mobile is the top rated stock in my model. So I need to do more due diligence on T-Mobile. I own a little bit of Verizon, do not own any AT&T, but T-Mobile is showing up as something that I really should be taking a look at. So, and it's mainly due to its dividend growth. So another one that's new that I've got to spend more time with is Thermo Fisher Scientific Incorporated, which is ticker symbol TMO. I need to find more about what they do, but it appears that they are about 34% undervalued. I'm not really even sure what their products are, but I need to study them a little bit more. I thought I would pass that on to you guys as well. It looks like it's got a wide moat, and the return on capital is not stellar. Return on invested capital is not stellar, but a pretty decent dividend safety rating at 72. So, it's worth digging into, right? I mean, that's really what this is about. It's about finding ideas. It's about finding where we want to spend our next dollar, or where I want to spend my next dollar. You can spend yours wherever you want. The next one is called Danaher Corporation. I need to find more about that. It's I'm saying 20%, so are the analysts. So that's going to be an interesting thing. And then let's see if there's any more. I don't see any more just right off the top. So out of the 27 that I added, it looks like, what happened? Oh, there we go. Looks like I've got 1, 2, 3. Looks like 3 of the 27, so 10% jumped up to the top of the model. And as you guys know, I don't like to hold more than, let's say, 25 stocks. So, that could be 10% of my portfolio right there, those 3 stocks. So I'm going to spend a little time with those, do a little research. Maybe you guys can do that too. Let's share, if you don't mind, let's share what we find out about these 3 stocks. That's T-Mobile, ticker symbol TMUS, Thermo Fisher, which is ticker symbol TMO, and Danaher, which is ticker symbol DHR. Let's find out, more about that, and let's talk about that in the Discord. And if you're not a member of the Discord, you can just click on the notes to this video and join. It's free charge. No, just come in and join us, and let's have a conversation about these 3 things. I'll start a thread or something on it. So just want to hear what you guys have to say about these as well. So there you go. That's what I have for the party today. And just want to see what you guys are up to. Let's see. Where do I go here? Yeah, Comfort Systems. I think Rust is a big investor in Comfort Systems. I have a tendency to, I don't know. I've got a buddy who owns a couple of HVAC companies, and things are kind of hinky at times, but sometimes these companies are so big they're just too big to fail, and so he's much smaller fish. So maybe that's a good stock. I'm just not really sure. So Russ says that ASML, those of you who don't know, ASML is, I think they're from the Netherlands. They provide lithography machines for these chips that are manufactured. They kind of have a monopoly almost. They're the technology that they use and the expertise that they have makes them kind of the place to go. If you are making chips, you got to go to ASML to get your lithography. So, but apparently things are slowing down for them. So we'll take a look at that. I'll try to find some info on that for you. Yeah, that's right. Russ says it's his fix, which is Comfort Systems, is his largest holding. Let's see. J&J is up huge. Is up on huge growth in the Shockwave acquisition. Man, that's great. I didn't. I've been bottling honey all day and went to church tonight, so I just haven't had a chance to read the J&J piece. But I'm glad to hear Shockwave is doing so well so soon. I think they were concerned about it not being accretive. I think that was last year. So I'm glad to hear Shockwave was a big deal for them this quarter. They got a steal of a deal. That's right. A steal of a deal. You should patent that, man. That should be your phrase. Steal of a deal. So let's see. Okay, gotcha. Fast Eddie's in the house. Good to see you, my friend. Welcome. Let's see what Russ says about Amazon. It's such an innovative company, a perfect buy and hold stock. Yeah, I think you're right. I'm trying to think of where this kind of falls out. I should get that out of your way. Not that you want to see me, but certainly don't want to see a lot of letters. But let me see if I can kind of tell where Amazon fell out. May have to do a search. Now the other problem is not so big I can't find anything. So we'll see. Hold on. Maybe I can get it. I'll do a Control F AMZN. Oops. I was on the wrong screen. Control F AMZN. Yeah, they're number 33. So the number 33 in the list. That means there's 32 companies that I should look at before I would invest in Amazon. So according to my model. So you got that going for you as well. Now, how do I get rid of, you guys can't see that, but anyway. Oh, there we go. I got this. There. Okay. Yeah, ex-dividend dad owns, CRM. That's right. And not ServiceNow. Gotcha. Yeah, I did get those confused. Stock price appreciation of Amazon makes up for no dividend. I know they will thought in 5 years. Oh yeah, they may pay a dividend in 5 years. Who knows? Yeah, the only challenge is trying to determine what a growth rate would be. One of the things I like to do is look at the dividend growth. The dividend growth of companies can be an indicator of what the future growth of the business is. That's why I like dividend paying companies, is they give you a little bit of insight into the growth. So Amazon doesn't give me that, so I got to kind of make that up myself, and not really sure that I trust all of that. But anyway, yeah, there we go. We're all Kev heads. There you go. All right. Gendry's in the house. Good to see you, my friend. Let's see here. I'm not too far behind, actually. So I know my buddy Russ gives me crap about that, but I'm not too far behind. Steve C has joined us 48 hours and 11 minutes late. Yeah, that I was only 48 hours late. So you're 48 hours and 11 minutes, Steve. I appreciate that, man. Michael Swami is here. Hey, good to see you, man. All the way down in Houston, H-Town. Robo Hand Tech. Yeah, that's right. Altria Group. You're right. That's one I couldn't think of. Why in the world could I not think of Altria? But I think it's just because it's been a long day and a hot day. It's been extremely hot. Yeah, Gendry hit it. Ex-dividend dad. You guys are amazing. Let's see. Oh, we got a quote here. I got to read it. In investing, it is never wrong to change your mind. It's only wrong to change your mind and do nothing about it. It's kind of funny. I mean, that's a great quote, but it's kind of funny when I think about that in terms of the other quote that I hear a lot, and that is the portfolios that tend to do the best are the ones whose owners are dead, who actually never go in and do anything with their portfolio. So sometimes changing our mind and not doing anything about it might be the best approach. I don't know. But anyway, there you go. For me though, I think adding more stocks is not a bad thing. Gives me just a better variety of stocks. And so anyway, and who knows, I may do this again sometime, add some more. The model is built so that it can handle however many I want. 125, I think I said, is a pretty decent amount. And if I want to pick 25 of 125, that's not so bad either. Yeah, T-Mobile does insane buybacks. Yeah, that's right. So not suffocated with a high payout ratio. Let's take a look at their here. I'll bring you guys into this as well. I'm going to go ahead and make it just a hair bigger. Hopefully that you can see that. Let's see. The buyback yield is 3.9%. So that's pretty reasonable. That's a really nice buyback yield. The dividend yield is 1.5. Buyback yield is 3.9. So the total, what they call shareholder yield, is 5.5. So there you go. Yeah, I didn't look at their payout ratio. Let's go take a look. There we go. There we go. TMUS. T-Mobile. This is really what kind of drives T-Mobile. Look at that dividend growth, man. 35.4%. Question is that sustainable? Is that something that they can continue growing that quickly? We'll just have to see. But their payout ratio is about 32%. So let's see what their earnings continue to go up and to the right. So I think that's definitely a sustainable trend, but we'll just have to see. I haven't bought them yet. I haven't done enough research on them at this point, but they are at the top of the model. So T-Mobile also partnered with SpaceX. I saw their Super Bowl ad promoting it. Wow, that's cool. Wonder how that's working out. Yeah, somebody buy $100 worth of all of my tossed out stocks and report back next year. Yeah, that would be hilarious, Steve. So you come back and you're 100% up on the stocks that I tossed out. That'd be awesome. Don't do that. I wouldn't recommend it. I wouldn't recommend buying the stocks that I added to the model, much less the ones that I threw out. I don't recommend stocks at all. I just kind of share with you guys what I do. And if you like it, you can use it. And if you don't like it, it didn't cost you anything. Yeah, that's right, Rust. I think our Discord is really good. And, there's some good ones out there, but I think we have some good discussions in there. And one other thing we do, and, some people wonder about this, so I thought I'd mention it, is we talk about every day, some of us post out there what our portfolio did for that day. And just so you know, we are not short-term investors here. We're not day traders. We're not looking at our portfolio to do anything in particular one day to the next. But what it does, I think, at least for me, when you have a down day, and sometimes the market doesn't go down as much as the portfolio does, and it's just really helpful, encouraging to see that others are having down days as well. So misery loves company, and so it's just a way to kind of keep from panicking on a day-to-day basis. So we do that, and if you're interested in that, come and join us. It's good stuff. Gendry, 20% in UNH, 10% in Pepsi. So I'm not sure what the percentages are, but UNH is, I own UNH. They have really had a rough go of it the last few months. Might be a great time to get in. I'm not selling them. I'm holding them for the long term. I think in the long term they'll be okay. But there's some risk there, and but that's why they call it investing, right? And Pepsi might be a great choice as well. From a long-term perspective, I think they're going to struggle a little bit with the health dynamic that's going on in the market, but I think in the long term they'll be fine as well. AMD had a good day. I did not look at AMD. Let's take a look at Advanced Micro Devices. Yeah, up 2.9%. That's good stuff. Stinking chip makers. All right, let's see. UNA risk to reward looks pretty good right now. Yeah, Rust, I think that's the way to think about it. If you're going to take ASML, UCTT supplies parts for their machines. Oh, that's good to know. I might write that down. Find a pen here. I did not know that. UCTT. I'll take a look at those, see if I need to add that to the model as well. Good suggestion, RoboHandTech. Can you pull up ASML's website? The CEO comments are there and misconstrued. Oh, okay. Earnings were great, and I believe it's a buy. Huh. Well, let's take a look here. Let me do this. I'll go ahead and get rid of that comment so you guys can see better. Let's see if there's anything in here from. Let's go to Morningstar first. See if they've got a write-up on ASML. I think Morningstar has a good measured approach to their write-ups. So let's see if they've got anything good here. Investors keep looking close into 2026 amid macroeconomic uncertainty. Here we go. Y'all pardon me while I read this because I have not read it yet. Despite solid order intake of euro 5.5 billion, investors disliked ASML's second quarter results as management tempered growth expectations for 2026. So that could be a bit of a problem. Shares were down 7% in trading on July 16th. Why it matters. In line with the current macroeconomic uncertainty, management commentary was cautious. While we still prepare for growth in 2026, we cannot confirm it at this stage. ASML has the capacity to ramp up production when needed, but demand remains weaker than expected, especially outside the AI market. Since they got some tariff threats creating hesitation and delaying investments across ASML's main clients, reducing visibility into future spending. On top of this, company-specific challenges at Intel and Samsung are not helping. On July 15th, Intel announced 2,400 job cuts. While this will improve Intel's efficiency in the long run, it brings more near-term uncertainty. Bottom line, they say we're trimming wide moat ASML's fair value estimate to euro 820 from euro 850. Wonder what that means in US dollaros. Yeah, so the current price is 733. Fair value was 950, and they said that they had cut it. Oh, I don't know. It sounds like 950 on July 16th, which is today, is the right number. So it looks like they are undervalued. Let's check the model real quick. Let's see what the model says. We're going to look for ASML. Look at there. Would you just look at there? Okay, I don't own them. They're on the watch list as a hold. Let's go back up here. I'm showing them at like a 12% annual return. Analysts are saying 19%. They have a wide economic moat. They're about 21% undervalued at the moment. Huge return on invested capital, 42%. Their uncertainty is high. They have a nice dividend safety rating of 82. So, it looks like a decent company. Fair value, which would have been this past weekend. Let me see if I can find it. 960. So it went from 960 to 950. It went down $10 per share, which is not huge. Yeah. So it doesn't jump up as a stock that just makes me chomp at the bits to buy, but it's certainly a decent stock. And if anybody bought it, I wouldn't blame them for buying it. I think it looks good. Let's see. Where was I? There I was. Okay, so there's that. And then my buddy Ex-Dividend Dad said to go to ASML's website. So let's look up ASML Investor Relations. What do I want to do with cookies? Only essential ones. All right. Fact sheet, financial strategy. I don't see any news. Where's the news? Maybe I got to go to home. I see annual report. Yeah, they'll make it easy. Latest press releases. Here we go. ASML reports 7. So here we go. So is this what you're talking about? This is their press release though. Let me see what my buddy Ex-Dividend just said. Okay, he sent me the link in the Discord. Okay, yeah, that's the earnings. That's the earnings release. So let me get back to where I can see you guys. There we go. CEO statement. We'll read that real quick. Our second quarter total net sales came in at 7.7 billion euros at the top end of our guidance. The gross margin was 53.7% above guidance, primarily driven by higher upgrade business and one-offs resulting in lower costs. That sounds like a great quarter, right? We see continued progress in litho intensity, particularly in DRAM, and the introduction of the twin scan, whatever that is, reinforces the momentum. Meanwhile, EUV adoption, that would be, I forget the term for that, ultraviolet, something ultraviolet. Adoption is advancing as planned, including high NA. I don't know what NA is. This quarter, we shipped the first new system. Looking at 2026, we see that our AI customers' fundamentals remain strong. At the same time, we continue to see increasing uncertainty driven by macroeconomic and geopolitical developments. Therefore, while we still prepare for growth in 2026, we cannot confirm it at this stage. We expect third quarter total net sales between those numbers with a gross margin of 50 to 52%. We expect R&D costs to be around blah. And then for the full year, 15% increase in sales and a gross margin around 52%. An interim dividend of 160. Second quarter, they purchased 1.4 billion worth of shares in their buyback, and they've got a buyback program, but I'm not going to go to that. So, yeah, I mean, what do you guys think? That's it's kind of an interesting message, isn't it? They basically are saying we had a great quarter. We are looking at, being 15% stronger at the end of this year financially, but we don't know what 26 looks like. We got all this uncertainty out there. We just can't get a beat on it. Ex-dividend dad might have a point there. I don't know. Might be worth looking into. But again, it doesn't rise on my spreadsheet. It doesn't rise. I mean, it's a decent stock. Analysts are saying 19%. I'm saying 12%. It's decent, but it's not one of the better stocks. So, yeah, you might have a point. I don't know, man. But if you like it, I would say do it, man. Okay, Russ says Danaher is like a Berkshire type conglomerate that has acquired dozens of life sciences companies. Generally allows them to operate independently. Okay, well that's good to know. Sounds like they are pretty decent. Want to get rid of. There we go. So yeah, I'm showing them at 20%, and the average analyst, and I don't use the average analyst in my calculation. What I do is I compare what I'm calculating. Here, I'll show you. So if you take a look here, let me raise this up just a hair. If you take a look at this line right here, you can see that's Danaher Corporation. It's on the watch list, and I'm saying that it's going to return about 20% over the next year. And analysts are also saying 20%. It doesn't always come out that way, but sometimes when it does, it's like, oh, that's pretty cool. So, it doesn't look like a bad investment. I just need to spend a little more time with it, a little more touchy-feely, you know what I mean? Top fan. I don't know what that means. What is this? What's this top fan stuff going on? I don't know, man. I don't know. You're my top fan. I'm your top fan. Amazon is going to launch satellite internet by the end of the year. Oh, that'd be cool. Somebody needs to, because the internet options are not that great. Let's see. Regarding that study about people forgetting about their portfolios, I believe it was debunked. Let me look into it. Yeah, that'd be great to know, because I've heard a lot of different things. Like, your portfolio is like a bar of soap. The more you handle it, the smaller it gets. So maybe that has been debunked. Maybe because all of that stuff really says you should just invest and not even look at it. But I don't think that's a great way to do it. I think that we learn so much when we're trying to invest. All right, owns 22 shares of Amazon, 22 shares of ASML. Good deal. Okay, the Dead People's portfolio is a financial urban legend. That's great to know, man. That is great to know. Harvesting honey in the heat with all that gear has got to be miserable. Michael, you don't know the half of it, man. It is so hot. I have this, I've been thinking about buying this hat that I saw. It's similar to this, and it has fans like right here that would be inside the veil. But I have this thing that has water. You put water on this little towel, and I wrap that around my neck, and it helps. But even the towel gets hot, so I have to like walk away, undo the veil, and then if you snap that towel, it kind of gets the air back into it and cools it back off again, and you put it back on. But it is smoking hot out there, man. Coffee can investing can provide some powerful results. Yeah, that's sometimes not losing is a good thing. Does anybody know why SoFi jumped in the last month? I don't know why. I don't really. They're not in my spreadsheet. I don't follow them at all. But let's real quick. I know you guys love it when I do this, but real quick, let's take a look at tip ranks. SoFi. It's a little slow today. Yeah, it has grown about 30%. Nice. Last 3 months, 95%. Last 5 days, only 0.28. But yeah, they've grown dramatically. I don't. Without doing some research here, I just don't follow them. I don't know what's driving it. It's fast. So, Rust is saying that SoFi has just had their customers access to OpenAI and SpaceX, and fintechs have been crushing it. SoFi kind of moves with Bitcoin. Okay, well, that's good to know. So Michael has a purple crown with a 1 next to his name. Does that mean I am Crown Royal? Yeah, I think it must be, because I'm not seeing that here. But I am actually in StreamYard. So I would have to probably go to YouTube to see what you guys are saying. I don't see that on here. Maybe it's some kind of new thing that either StreamYard or YouTube has, and but I'll find out. I'll take a look. It'll be fun. Let's see. New chat updates for YouTube shows top fans. So, hey, that's really a way to get to be a top fan, man. Is just pound the pavement here with comments. That's great. So if we are talking about forgetting about the portfolio and it's soap, isn't that just another way of dropping the soap? Yeah. There's certain places you do not want to drop the soap, and maybe your portfolio is one of those places. I don't know. I'm not sure what this means. I had to post one comment, third week in a row. Let's see if he puts it up. Yep, I put it up, buddy. I read everything. I don't necessarily post show everything, but I do read it. Yeah, more like never touching the soap. Yeah, that's true. Leave it there. Awesome. All right. So, we are about 45 minutes in. I think I am caught up with everything. Let's hit the news real quick. Mainly because I haven't looked at the news, and I thought that might be helpful. It'll help me if you guys are okay with it. And if you're not, that's fine. Let's see. Kraft Heinz faces pressure to reinvent as industry headwinds mount. I hate to hear that because Heinz ketchup is the best. It's the best. But they are downgraded from borderline 60 to borderline 50. So that's not great. Union Pacific lifts their dividend by 3%. Smucker ups their dividend by 1.9%. ECC, Eagle Point Credit Company, I don't even know who that is, but good thing because they've been downgraded from unsafe to very unsafe, 30 to 20. I would stay away from those guys. That would be your true definition of a yield trap, so stay away from that. Brookfield Infrastructure, they have a new outlook on that. Looks like the dividend safety has stayed the same. So just if you wanted to go read that, you could. Duke raised their dividend by 1.9% for their 18th consecutive year. Cummins, man, they jumped theirs by 9.9%. What is Cummins doing now? Because I used to own them and sold out. So around like the 330 range. So they're like 345. So I could have held on to them, but it's not like they jumped another 50% or whatever. That's good. Where was I at? Here we go. So, but they have jumped their payout by 9.9%. Ooh, looks like Eagle Point Income has been upgraded. I don't know anything about them either. Wonder how okay, here's NNN. I forget what that stands for. Just NNN, huh? Nudges dividend higher at 3.4%. That is a retail REIT. WK Kellogg to be acquired by Ferrero Rocher, I think is what that is, after a brief standalone run. So that's good to know. WPP issues a warning on slowing sales as structural headwinds mount. They go from a 60 to a 50 dividend safety rating. PIMCO is going from 40 to 50. So that's good news for Prudential. I think they own a lot of PIMCO. So, maybe that's good for Prudential. Brookfield Infrastructure Partners, it's a gas utility. They refreshed their outlook on that. THW's payout went down. Marsh McLennan, I just added them to the model. They elevated their dividend by 10% on July the 9th. That's good stuff. 16th annual increase. So good deal. And just a couple more here. Nothing too exciting. So Okay. So that is the news for the day, for the week, really. Let's see if there's anything else that's come up in here. If you're here, you are more advanced than others. A bad trade can turn out to save your gains as a tax covering. Yeah, that's right. I think you're right, Robo Hand Tech. If we are sitting around talking about this kind of stuff, it's there's a language that we build up as investors that those who don't invest don't really follow that language. And so, but I'm glad they save, and I'm glad they use mutual funds or ETFs or whatever they're investing in. But there are quite a few people who don't really follow investing, and that's not bad. This means they're not interested in it. I, for one, am interested in it. And as you guys recall, I talked to some of my they're not teenagers, they're like in their 20s, early 20s, about investing and things like that. And one of the things I had to when I saw the blank look on their face as I was talking, it was like, I probably better boil this down a little bit. So I began to talk about investing as capital growth versus income, and so that they can kind of understand that if you put money in something, in an investment, you're looking for one or the other or both. You're looking for that investment to grow, or you're looking to get income off of that investment. So anyway, we had a good conversation about that, I think. Good night, Fast Eddie. Good to see you, my friend. NNN stands for net, triple lease net, triple net lease. Okay, that's good. I didn't know that. I had looked at them at one time as a REIT. I don't think I ever bought them though. Hey Russ, I'll see you later, my friend. It's good to see you. And so I think that's going to be it for tonight. I'm dragging, guys. I appreciate you guys being here. We've had a great week. It's been a fantastic week in the market, at least for us dividend investors. So let's keep an eye on it. Let's keep buying opportunistically, and I will get off of here because we're going to be back on Monday, hopefully, and so it won't be too many days before we're back. So yeah, I appreciate that, Michael. Hit that like button, and we'll see you on the next one.